In just my first week of experimenting with Sifchain, I earned 1,728 Rowan tokens, valued around $250 at the time of writing. After reading through their documents and fully learning how their decentralized exchange works, I decided it was time to share it for anyone else who wants to experiment with DeFi platforms and start earning passive income on their crypto. So in this video, I'll show you exactly how to earn 300% APR on crypto assets using the Sifchain Decentralized Exchange, or DEX. This is the first time I've really experimented with DeFi, so we'll start with covering some of the basics of Sifchain. We're going to be making money by adding liquidity to liquidity pools, so I'll explain how that works. I'll also touch on the primary risk of liquidity pools, which is impermanent loss. Fortunately, Sifchain has two great solutions to this with its liquidity mining program and its impermanent loss mitigation, which work together to earn us that 300% APR figure. Finally, I'll walk you through step by step on how to get started on Sifchain and also give you a quick look at how I'm currently using it. Let's get started. I came across Sifchain because I invest in and follow Legacy Network, a Layer 1 blockchain project. They were announced as an asset to receive 300% APR in Sifchain liquidity pools, and with numbers that high, I had to take a look. Sifchain is a decentralized exchange, or DEX, and the first omni-chain DEX. This means that unlike most DEXs, which only allow you to swap between assets on a single blockchain, such as Uniswap with Ethereum and ERC20 tokens, Sifchain allows you to swap between assets on multiple different blockchains. They currently support assets from quite a few blockchains, most notably Ethereum and Cosmos, with more to come. Like most DEXs, Sifchain relies on liquidity pools to make these swaps possible, so let's dig deeper there. Liquidity pools are a core component of any DEX, because they provide liquidity for the assets that users want to swap between. With decentralized platforms, anyone can add their assets to a liquidity pool to make it possible for other users to swap between the two assets in the pool. For example, the Ethereum USDC pool on Uniswap contains over $400 million of ETH and USDC, so users can swap large volumes between the two assets pretty efficiently. The reason that people add liquidity to DeFi pools is because they'll earn transaction fees from users who swap using their liquidity. This is typically a fixed percentage of the volume swapped, which will then get paid out to the pool. So if you provided 2% of the total liquidity in a pool, you would earn 2% of all the fees collected from users who are swapping their assets with that pool. The liquidity pool will grow as fees are added to it, and with your percent ownership of the pool remaining constant, you'll actually gain ownership of more assets over time. With Sifchain though, there are two unique qualities that differentiate their liquidity pools from other DeFi platforms. First, 1/2 of every liquidity pool is the native Rowan token. So you won't find any stablecoin pairings, Ethereum pairings, or anything else unless it's with that Rowan token. However, this is also the reason that you're able to swap across multiple blockchains. You can either swap into Rowan tokens and then into something else, or choose to swap directly into other assets while the Sifchain platform swaps through the appropriate Rowan token pairings behind the scenes. Second, Sifchain doesn't require you to pool liquidity symmetrically like most other DEXs. On Uniswap, for example, if you wanted to add liquidity to that Ethereum USDC pool, you need to add an equal amount of both Ethereum and USDC to the pool. This means you'd either have to own both assets or swap one of them for the other one to add both of them to the liquidity pool. Sifchain allows you to add liquidity asymmetrically, meaning you can provide liquidity to a pool even if you only own one of the assets. You'll have more ownership of the pool if you add both assets in the pairing, which is a neat incentive for adding liquidity that balances out the pools. And to be clear, you will still have exposure to the other token in the pairing, in this case the Rowan token, due to the nature of liquidity pools, but it makes it easy for users to get involved without having to own different assets. I'll link a Sifchain article below that goes into all of the technical details and advantages of asymmetric liquidity pools. Of course, one of the main risks with providing liquidity to a pool is impermanent loss. This is well explained by a Whiteboard crypto video, which will be linked below and on screen, but I'll quickly run through the basics. Since liquidity pools are decentralized and function on their own, the price relationship of two assets can vary from one DEX to another exchange. In fact, assets are often priced slightly higher or lower on various exchanges. Because of this, there is an opportunity for arbitrage. This means that users can buy an asset low on one exchange and then sell it higher elsewhere for guaranteed profit. This is a threat particularly when the price difference between a liquidity pairing is changing, such as one asset appreciating or dropping in price faster than the other one. As arbitrage traders take advantage of this price difference, the ratio of tokens on each side of the liquidity pairing can change. So, when it comes time to withdraw your assets from a liquidity pool, since you own a certain percentage of that pool, the percentage now applies to the new ratio of the token pairing. This means you could end up withdrawing a different number of coins, and therefore a different dollar value, than what you initially added to the pool. The difference in what you withdraw and what you initially provided is known as impermanent loss. Again, I'd highly recommend checking out the Whiteboard crypto video for a full explanation, but this is one of the biggest drawbacks of providing liquidity to a pool. For some people, the risk of impermanent loss may not be worth gaining a few percent returns for providing liquidity. However, Sifchain makes providing liquidity much more attractive with two fantastic programs. The first is the current Liquidity Mining program, which is how users can earn over 300% APR on their assets. And that's on top of the swap fees that liquidity providers are already earning. This is a limited time program that is designed to incentivize users to add liquidity to the new Sifchain DEX. While this program is active, there will be 6 token pairings that offer 300% APR. One of them will be the Rowan Atom pairing, and the other 5 will be voted on by the community monthly. And this is how Legacy Network got added to the 300% APR program. The current program runs until January 17th and includes pairings with Atom, Rowan, ETH, Juno, Luna, and ZCX. All other token pools earn 100% APR throughout the program, which could be extended past the 17th if voted by the community. The important thing to note here is that this 300% APR is paid out in Rowan token on a weekly basis. While it's unclear how long it will last, if you continued adding your weekly rewards into the liquidity pool at the 300% APR rate, you would see over 1,700% APR for the year. Another very important detail is that most of these rewards are likely coming from inflation, or the creation of new Rowan tokens. While Sifchain hopes to use a number of sources to provide these rates, they will resort to token creation if needed. This is going to increase the Rowan token supply, which is not necessarily a good thing, as it will dilute the value of the Rowan token over time. This is a problem that many crypto projects have, because releasing new tokens into the ecosystem is detrimental to a token's price. So this is worth considering if you want to participate in liquidity mining on Rowan. If everyone chooses to sell their tokens instead of continuing to lock them up in liquidity pools, the price could drop fast, meaning that you may not realize returns as high as 300% APR. However, since Sifchain is a fairly new project, it could benefit early adopters as they'll be able to acquire a lot of Rowan tokens before the project gains wider adoption. The second feature that makes Sifchain liquidity pools particularly attractive is their impermanent loss mitigation. Now, technically, you don't realize impermanent loss until you remove your assets from the liquidity pool, which means there's a chance you could just keep holding your assets there until your losses are restored. However, if you're forced to withdraw liquidity or just want to leave the pool, Sifchain is going to help offset any impermanent losses you realize. Throughout the duration of this initial liquidity mining program, if you realize any impermanent losses, you'll continue earning the aforementioned liquidity mining rewards on that amount. So if you put $1,000 of assets into a liquidity pool, but only withdraw $950 worth due to impermanent loss, you'll continue earning the pool's APR rate on the $50 loss that you realized. Considering that you'll just have to accept impermanent loss on other DEXs, this is a really unique incentive to try out the Sifchain pools, and is one of the biggest reasons I chose to start experimenting with Sifchain in the first place. Again, we don't know how long the program will last, but for the time being, you probably won't find a program like this anywhere else. Between this and the generous liquidity mining rates, I think Sifchain more than makes up for the risks of providing liquidity and makes it possible to earn substantial income on top of it. So if you're interested in trying Sifchain, here's exactly how you can get started with earning 300% APR. First and foremost, you'll need a VPN. The Sifchain DEX is not accessible in the US and in some parts of the UK, so you'll need a VPN to access the site. I personally use TunnelBear because they have a free version that offers more than enough monthly data for my crypto activities, but any VPN should work here. Next, you'll have to install a Kepler wallet to your web browser. This wallet will let you create a Sifchain address and bring a variety of assets onto the platform. You'll also need a MetaMask wallet if you want to add any ERC20 tokens to the platform. Once you've created a Sifchain wallet, you'll get a pop-up that says to submit a tweet with your address and the hashtag GetRowan, and you'll automatically be sent Rowan tokens to cover your first gas fees. This should be plenty to make your first swap into Rowan tokens or to add liquidity to a pool and start earning liquidity mining rewards. You can also find a Rowan faucet linked on the Sifchain Twitter to get started with additional tokens. The next step is to import your assets from either the Kepler wallet or MetaMask onto Sifchain. This will come with gas fees, so make sure you have the appropriate balances in your outgoing wallet to cover this. Once you've successfully imported assets onto Sifchain, all that's left to do is add liquidity to a pool. For this, you simply navigate to the Pool tab and click Add Liquidity. You'll select the desired asset from your available balances on Sifchain and choose how much to add. Be sure to uncheck the Pool Equally option if you'd like to add asymmetrically. When adding asymmetrically, The box color will change if you add so much that it throws off the balance and negatively impacts the price. Once you've entered the desired amount, just click Add Liquidity and pay the fee in Rowan token, typically about 0.5 or less Rowan, which is just a few cents. After it confirms, you'll immediately start earning rewards based on your balance in the liquidity pool. Trade fees are sent directly to the pool and are reflected in your pool value, while the liquidity mining rewards are shown in the Rewards tab and must be claimed every week. These rewards are paid out by Tuesday morning Pacific Standard Time, and you must claim them by 8 a.m. PST on Monday to receive your rewards for that week. Whenever you're done with liquidity pools, you can navigate to the Pool tab and remove liquidity as desired. At this point, you can withdraw any portion of your assets in either Rowan token, the other token in the pairing, or a combination of the two, again requiring a small fee in Rowan token, so be sure to always keep some handy for transactions. And that should be everything you need to know to get started with earning on Sifchain. As mentioned earlier, I'm currently using Sifchain to earn 300% APR on my legacy network tokens, since it's one of the 6 pools that currently offer that rate. I started with adding 900,000 legacy tokens to the pool, which had a value of approximately $5,000 at the time. During the first full week, I earned 1,728 Rowan tokens, although I could have claimed a few more if I waited a little longer, so those will get pushed into the next week. The Rowan token has been bouncing around 13 cents, which means I earned approximately $225 in that first week, or about 4% on my balance. Since then, I've added an additional 400,000 legacy tokens to the pool, and will continue adding my Rowan token rewards back into the same pool to compound my earnings as much as possible. If the 300% promotion continues for another month, I'll definitely be sticking around a little longer, particularly if the rate continues on legacy. If it doesn't continue on legacy, I'll be withdrawing my principal and leaving all the rest in Rowan tokens in one of the 300% pools so that I can continue earning the highest rates on that balance. But as long as the impermanent loss mitigation and 300% rates continue, I've got no problem sticking around and seeing how things go for a few months. And if the Rowan token starts gaining traction, maybe we'll even see some unexpected gains that I can diversify back into other assets. And again, if you're going to get started, please check out the Whiteboard crypto video on impermanent loss, just to make sure you have a full understanding of the risks involved. But thanks for watching, and I'll see you in the next one.